Hello everybody, Coach D here with TackleTrading.com. I wanted to do a quick how-to video on how you can use leverage to control an asset using a fraction of the money you think you would need to buy that asset. And we're going to do that showing you two simple techniques. The first technique I'll show you is how to use margin to give you leverage. You can get about 2-to-1 leverage, or you can lower your cost base to about 50% of the money you would need to buy an asset. So I've got a good looking stock here. Ticker symbol is TEAM, which came from our this week's stock scouting report on the options report. And we've got a nice looking little cup and handle here with a good looking breakout. And this stock is right here in this $100 price ballpark, which will make the math easy for us. So imagine, if you will, buying a stock that costs $100 per share. And if you wanted to buy 100 shares, well, in a cash account, that would take you $10,000 because 100 times 100 is 10,000 there. So that would take a bunch of cash. Well, you could cut that in half if you used a margin account, because a margin account only requires you to have about 50% of the capital required to hold that. So instead of using $10,000, you could use $5,000 to control that asset using 100 shares. And again, if the stock price rose, imagine it rose $10. Well, that would be a 10% return on a cash account. But that, because you only put in half the money, it would be a 20% return on a margin account. It gives you that extra leverage. Now, here's where I think it gets really interesting. We're going to shift gears and look at options. So I'm going to open up a virtual trading platform here and just show you an options chain on TEAM. And again, it's about a $100 stock. And we can go look at buying options on it. We can go buy some longer term options out here for the month of June. And let me pick a nice bright color here so we can see that. And you can look at the $100 options contract, and that has an ask price of about $11.40 and a bid price of about $10.90, which means we could buy that contract for about $11.20 per share, which would give us the right to that asset. We'd be able to control that for the next 138 days until the third Friday in June. So that's just a little over 10%. 10% would be about $10 for that contract. So we're at about 11%. But again, you could control that asset for $11.20 per share times 100 shares. Again, that's the price of $100. Times 100 shares, that would be $1,120. And that, ladies and gentlemen, lowers your cost base significantly, which also means that the ROI, again, if that rose 10 points, $10, you'd end up getting about 70% of that return on that options contract, and that would be close to probably 60, some odd 70% ROI on the amount of capital you use to control that asset. Again, that options contract gives you a right to buy the stock at 100, but no obligation. And that contract, again, is good until it expires. And if the stock price rises, we have used leverage to absolutely increase our ROI, return on investment. So if you like this video, come over and hang out with us at TackleTrading.com. We've got an awesome 15-day trial you can take advantage of if you haven't yet, and you come to get to know our community and see all of our amazing content that we put out to help you learn how to trade with confidence.